Gotcha. And I didn't know, I did a little bit of research a couple weeks ago because I was just curious. Like, I didn't know that there was any secondary loan market that like banks sell off the note to like somebody else.
Yep.
Can you explain that? Because I feel like a lot of people have no idea what that is.
Yeah, they have no idea. Yeah. So whenever you get a loan, at least with PyraMax Bank, so we have two options. I can service released, where that means we release the servicing. After we close your loan, a month or two later, you're going to get a letter in the mail saying, hey, your loan has been sold and bought by X investor.
Okay.
Or servicing retained means if you don't want to get that letter in a month after you close and you always want to call me with questions, you can call me. That's servicing retained. The two options come with different interest rates. If it's servicing released, you can get a little bit of a better interest rate typically because we aren't guaranteeing holding your hand for the next 30 years if you have questions. If it's service retained because you never want to get that letter that your loan's been sold, the interest rate's a little bit higher, typically 0.5%, but it's situational. But that loan doesn't get sold, stays with us, we service it.
Gotcha.
So, well, I shouldn't say that. We would service the loan. It still couldn't get sold, but we would service it.
Okay. And what would be the difference between those two loans? Like, why would you guys want to keep one? Why would you want to sell it?
So the ones that we keep are typically because either the property or the client didn't fit in a box. So like our new construction, you can't sell a loan if the house isn't built yet.
Gotcha.
So we keep that on the books with new construction. It's interest-only payments while the house is being built.
Okay.
Because you probably have other housing payments where you're currently living. So it's tough for some people to balance 2 full mortgage payments.
Okay.
So it's interest-only while the house is being built. Once it's built, now it has value, it's livable. That's when we can either keep it on the books or we can modify it and sell it.
Gotcha.
So
and
you have options.
Would you guys sell it to get more cash on hand? Is that why banks do that?
Correct. Yep.
Okay.
Because money can go really quick if you've got a bunch of people buying $600,000 houses.
Right.
Like money on hand gets spent really quickly.
Okay.
So the name of the game is book the loan and then sell it.
And who are those investors? Just normal people, or are they big hedge funds and stuff?
Yeah, big hedge funds, big banks. I don't know. It kind of depends. So whenever we're looking at interest rates, I ask the questions to my clients, what's important to you? Do you always want to have to deal with me, or are you okay with getting your loan sold? Is interest rate important to you? Like local servicing? And, if they don't know, I'll explain it to them. And then they can say, like, you know what? I just want the best interest rate, Tony.
Yeah.
Okay, perfect. Your loan's probably going to be sold. But we can get you a better interest rate that way.
Right.
Whatever gets me the lowest interest rate.
Gotcha.
Okay, understood. So
if they wanted to go refinance, who would they reach out to then? Once it's sold, is there like a point of contact?
Always call me.
Really?
Yep.
Even if you guys aren't servicing it or anything anymore?
Yep. So
Really?
I can refinance any loan.
Okay.
So it doesn't have to be originally booked with me. If you originally got your loan with another local bank or a credit union or a broker shop, I can always refinance it. It doesn't have to go back to the same person that you originally worked with.
Huh. Interesting. So we'll leave your stuff in the description.
Link below.
Yeah, link below. So would those refinances, those would become like a good loan, and then you guys would sell those right away then too?
Probably, yeah.
Really?
Because most people are refinancing because they want a better interest rate.
Right.
So the way to get them the best interest rate would probably be to sell the loan.
Huh.
Now, it's situational. It depends on what your credit score is. Is the property unique? Like, I've had ones where they're literally built into a hill and there's no roof. The roof is dirt and grass. Like think of like the Hobbit house. Like, I've literally, like, no investor is going to buy that loan because that's a unique property.
Okay.
Other unique properties are where they've got a lot of land, where like maybe it's 15 acres. We'd like to keep it under 10 acres for land size. Otherwise, it opens up a different umbrella. If you have more land than that, it could be zoned agriculture. So it has to be zoned residential. Or some agriculture, it's like, well, we rent out the farmland. So unique properties like that where we don't have an outlet for it, we're going to keep it on the books because we believe in the borrower. They're a strong borrower. The loan makes sense, but we just don't have an outlet for it. So that's where we would keep it in-house.